Hey everyone, and welcome back for another deep dive. You guys sent in some fascinating stuff this week about gold, its recent price movements, some analysis. We're going to break it all down, try to help you understand what's driving those prices, and more importantly, give you a sense of what to watch for in the coming weeks. Before we get into that, I did want to mention something pretty cool I came across. It's a company called Traders with Edge, and it seems they actually fund up-and-coming traders. And we're talking potentially up to $500,000 if you can successfully complete one of their challenges. So yeah, something to think about if you're thinking about getting serious about trading, whether it's gold or other assets. But okay, let's get back to the main event here. Gold just hit an all-time high of $2,685. That's huge.
It is huge. And it's not just some random spike. There are some serious forces at play here. Remember, gold often acts as what we call a safe haven during times of global uncertainty. And right now, we've got a whole cocktail of geopolitical tensions. From that ongoing war involving Israel and Iran to the broader instability in the Middle East, all this is pushing investors towards assets they perceive as less
So
risky.
it's like that classic flight to safety we always hear about. But
Exactly.
it's not just geopolitics driving this, right? I was looking at that data you sent, and there's some interesting stuff happening with the Fed and interest rates.
Yeah, you're picking up on a key point there. The Fed has been hinting at a less aggressive stance on interest rate hikes. And this is important because a less hawkish Fed, it typically weakens the US dollar. And when the dollar weakens, gold becomes more attractive to international buyers. It boosts demand and drives up the price.
Okay, so weaker dollar, stronger gold. I'm starting to see the connection, but hold on a second. Didn't I also read something about economic growth concerns, particularly with China and the Eurozone?
You did, and those concerns are absolutely playing into gold's appeal as well. China's GDP growth for the second quarter of 2024 came in at 4.5%,
Okay.
which is slower than expected, and the Eurozone's struggling too, with just 0.3% growth last quarter. This kind of economic uncertainty just adds fuel to the fire. It pushes even more investors towards those safe haven assets like gold. It's all about that perceived stability during times of volatility.
Got it. So we've got geopolitical tensions, potentially weakening dollar,
Hmm.
and global economic jitters,
Yeah.
all kind of creating this perfect storm for gold to rally.
Yeah.
Fascinating stuff. But I'm also curious about what the charts are telling us. I love a good technical analysis breakdown.
Of course. So after that incredible surge to an all-time high, gold's entered what we call a consolidation phase. It's basically taking a breather, finding a balance between buyers and sellers before its next major move. And this is totally normal after such a big price swing.
A pause before the next big move. Okay, I like that. So what should we be watching for in terms of key indicators levels?
First, keep an eye on that 50-day simple moving average, or SMA for short. It's currently around $2,519 and acting as a pretty solid support level. Then there's the overall price pattern. We're seeing higher highs and higher lows, which confirms that, despite this current consolidation, the broader trend for gold remains bullish.
Okay, so the 50-day SMA and the higher highs and higher lows. Those are good signs for those who are bullish on gold. But what about specific resistance and support levels? Those feel super important for anyone thinking about buying or selling.
Absolutely. The recent all-time high of $2,685, that's our key resistance level right now. If gold manages to break above that convincingly, it could signal a continuation of that upward momentum, potentially pushing it towards $2,720. On the downside, we have short-term support around $2,532 with a stronger support zone near that 50-day SMA we talked about at $2,519. If gold dips below these levels, it could mean a deeper correction is on the horizon, maybe even a drop towards $2,450.
So this is all super helpful for understanding the technical side of things. But I know there's a lot more to the gold story than just charts, right? What about the broader economic landscape? What are the fundamental factors at play here?
You're right, the charts tell one part of the story. But to get the full picture, we need to zoom out and look at those fundamentals. One of the biggest drivers right now is inflation. The US CPI for August just came in at 3.2%, which is higher than many expected. And persistent inflation tends to benefit gold as it erodes purchasing power and makes real interest rates less attractive.
So inflation is basically gold's best friend.
In a way, yes. When your money buys less over time, gold starts to look pretty appealing as a store of value. Another important factor is treasury yields. The 10-year treasury yield is currently around 4.2%, which is relatively low, and this reduces the opportunity cost of holding a non-yielding asset like gold.
Got it. Low yields make gold more competitive. Anything else we should be factoring in?
Two more big ones. First, central banks around the world have been buying up massive amounts of gold. In 2023 alone, they purchased over 1,100 tons. This kind of demand from major institutions, it's a strong signal they're bullish on gold's long-term prospects. And then there's the US dollar index, or DXY, currently sitting around 104.50. A strong dollar typically puts downward pressure on gold prices, so if the dollar starts to weaken, it could provide further support for gold to move higher.
Wow, there are a lot of moving pieces here. Geopolitics, interest rates, inflation, central bank activity, the dollar's like a giant puzzle. But I think we're starting to see how all those pieces fit together. But the big question for anyone following gold right now is buy, sell, or hold.
That's the million-dollar question. And it's not always a simple answer. Given that gold has just broken through to a new all-time high, but is now in this consolidation phase, I'd say the outlook is neutral to long. If it breaks above that $2,685 resistance level with conviction, it could signal further bullish momentum. But we need to be cautious, especially with upcoming economic data releases and the ongoing geopolitical volatility.
Proceed with caution. Got it. Before we wrap up this part of our deep dive, is there one key takeaway you want to emphasize for our listeners?
Absolutely. Risk management is crucial, especially in a market like this. Given all the uncertainties we've discussed, managing your position size appropriately is key to navigating those potential market swings.
That's great advice. We've covered a lot of ground here in this first part of our gold deep dive. We explored the factors behind its recent record-breaking rally, delved into some technical analysis, and started to unpack those broader economic forces at play.
And we've only just scratched the surface.
Exactly. So much more to explore. So stay tuned for part 2, where we'll continue to unravel the complexities of this market and provide you with even more insights to help you understand what might be coming next.
It's fascinating how gold just captures the imagination, especially during turbulent times like these, this ancient, almost mythical metal that's held value for centuries.
It's true. Gold has this incredible history, but I think beyond the historical allure, what I find really interesting is how it acts as this barometer for the global economy. It's like gold has its finger on the pulse of global sentiment.
Exactly. When gold prices are surging like they are now, it can signal a lack of confidence in those more traditional investments and a real search for stability. It tells us something about how investors are feeling, about the world, the economy, everything.
So it's not just about the numbers and charts, it's about psychology too. Fear and uncertainty can really drive those big swings in the price of gold. I remember reading about how gold skyrocketed during the 2008 financial crisis.
That's a perfect example. During times of crisis, people flock to what they perceive as safe and enduring, and gold has often played that role. We're seeing a similar pattern now, albeit for different reasons.
Speaking of patterns, I keep thinking about those massive gold purchases by central banks. Why are they so keen on adding so much gold to their reserves?
It's a significant trend, and it really suggests a potential shift in the global financial landscape. Many central banks, particularly emerging markets, are looking to diversify their holdings away from the US dollar.
So it's almost like they're hedging their bets, preparing for a world where the dollar might not be the dominant force it once was.
Precisely. They're looking towards a more multipolar world, where other currencies and assets like gold play a much bigger role, and this could have major implications for the global financial system as we know it.
Wow, that's a pretty big deal. Makes you wonder what the long-term consequences of this shift might be. But getting back to gold itself, you mentioned earlier it's considered a safe haven. But with prices fluctuating so much, is it really safe?
That's a great question, and it highlights a very important point. No asset is entirely risk-free. While gold has this reputation for holding its value over time, it can experience periods of volatility, especially in the short term. We're seeing that right now with this consolidation phase.
So even with a so-called safe haven asset like gold, diversification is still key. Don't put all your eggs in one basket, right?
Exactly. Spreading your investments across different assets, it's always a smart move. It helps mitigate risk and creates a more balanced portfolio.
That makes a lot of sense.
Yeah.
But going back to those support and resistance levels we discussed earlier, how relevant are they for someone who's not actively trading gold?
Even if you're just a long-term investor, understanding these levels can be really helpful. They provide insights into the potential direction of the market. For example, if gold breaks above that key resistance level, it could signal further upward momentum, which might influence your decision to hold or even add to your gold position.
So it's like having a little bit of that insider knowledge.
Yeah.
Even if you're not a day trader, it helps you understand what the market is thinking.
Exactly. It empowers you to make more informed decisions. Knowledge is power, especially when it comes to navigating the financial markets.
I love that. But let's be honest, the world of finance can be pretty intimidating. It's full of jargon and complex concepts.
You're right. It can feel overwhelming. That's why it's so important to break these ideas down into more manageable pieces, make them understandable for everyone, regardless of their financial background.
And that's what we're trying to do here, right? Demystify this complex world of finance, make it accessible, and, dare I say, even enjoyable.
Absolutely. Learning about finance shouldn't feel like a chore. It should be a journey of discovery. And hopefully we're making that journey a bit more engaging.
I think we're doing a pretty good job of it. We've covered a lot of ground. In this second part of our deep dive into gold, we explored its historical significance, its role as a safe haven asset, the implications of those central bank purchases, and how even non-traders can benefit from understanding technical analysis.
And there's still more to uncover.
You're right. So much more. Stay tuned for part 3, where we'll continue to delve into those factors shaping the gold market and provide you with the insights you need to make sense of it all. All right, back for the final part of our gold exploration. We've talked about those record highs, the safe haven appeal, central banks buying it up. It's a lot to take in, but I feel like we're starting to see the bigger picture here. You mentioned earlier that breaking above $2,685 could signal further bullish momentum for gold. But what other signs should we be looking for to confirm that? It can't just be about the price.
Yeah, you're exactly right. Focusing solely on the price. It's like trying to navigate with only a compass. You might get the general direction, but miss all those important landmarks along the way. To really understand gold's strength, we need to consider the economic landscape as a whole. So let's imagine gold does power through that $2,685 resistance level. The next thing I'd be watching closely is the US dollar index, that DXY we talked about. If gold is rallying, but the dollar is also strengthening, it might indicate that gold's move is more about investors seeking safety rather than genuine bullish sentiment. Ideally, we'd want to see the dollar weakening, or at the very least, staying stable alongside a rising gold price. That would give us more confidence in that bullish signal.
Okay, that makes sense. So it's about looking at the relative strength,
Yeah.
not just gold in isolation. So what else should we be keeping an eye on?
Inflation data is crucial. Remember, rising inflation is generally positive for gold, as it erodes purchasing power. So if we continue to see those consumer price index numbers, particularly core CPI, which excludes those volatile food and energy prices, if those numbers are exceeding expectations, it would just reinforce the argument for gold's continued strength.
Because persistent inflation makes holding on to something that tends to hold its value, like gold, all the more appealing. What about interest rates? How can we track those in a way that's relevant to gold?
The 10-year Treasury yield, that's a great indicator if gold is rallying. But we also see a significant climb in yields. It could mean the market is anticipating the Fed raising interest rates in the future, and that could create headwinds for gold in the long run. Conversely, if yields remain relatively stable, or even decline while gold continues to climb, it supports the idea of a more accommodative Fed, which is positive for gold.
This is fascinating stuff. We're basically piecing together an economic puzzle using all these different indicators to get a clearer picture of where gold might be headed.
Exactly. The more pieces we can fit together, the more confidence we can have in our analysis. And of course, there's always an element of unpredictability in the markets. But having this framework for understanding how the pieces interact is incredibly valuable.
It definitely makes things feel less like a guessing game and more like an informed assessment of the situation. This reminds me of something you said earlier about gold being a reflection of global sentiment.
It acts as a sort of emotional barometer for how investors are feeling about the world.
So when we see gold rallying like this, it's not just about the numbers. It's also a sign that people are looking for stability and security in these uncertain times.
That's a great point. It reminds us that markets are ultimately driven by human emotions and reactions to what's happening around us.
Well said. And folks, that's what we aim to do here on the Deep Dive. Help you connect the dots, understand those complex forces at play, and hopefully give you the knowledge and confidence to navigate this ever-changing world a little bit better.
Absolutely. We're all about empowering you with the information you need to make sense of it all.
That wraps up our deep dive into gold for this week. We covered a lot of ground, from record highs and technical analysis to the broader economic forces shaping the market, and even the psychology behind it all. I hope you found it insightful.
And remember, this is just the beginning of your exploration. There's always more to learn, more to discover, more to analyze. So keep diving deep, keep asking questions, and keep that thirst for knowledge alive.
Until next time, keep on learning and exploring, everyone.